Welcome back, guys. This is Greg Silverman with another session of Come Learn With Me. We look at articles that are investment related. I'm the Chief Investment Officer, outsourced, and we see what you're liked and what shared over the last weeks or so, and then we read them together in a Come Learn With Me format. And stick with us and ask some questions down below. So this article is about the China IPO market trounces the world with record 58 billion boom. Wow. I wonder if it's a lot of the delistings that went on from the US back to China. China proceeds on the mainland increases while they shrink in most markets. Okay, so we see this increasing. From London to Hong Kong, large initial share sales have all but dried up across the world's financial centers this year, but the market in China is bustling with activity. Initial public offerings on mainland exchanges have climbed to 57.8 billion so far in 2022, the largest ever for such a period, according to data compiled by Bloomberg. There have been 5 IPOs above 1 billion since January, and one more is on the way. That's versus just one sale each in New York, Hong Kong, and none in London. China's IPO market has defied headwinds such as rising interest rates and fear of a US recession, which have brought major equity fundraising elsewhere to a virtual standstill. Offerings in the Asian economy, whose monetary policy is diverging from the Federal Reserve, are largely geared towards local investors. The surge in listings, according to some market watchers, is also driven by concern that economic conditions could worsen late in the year as flare-ups in virus cases cause Beijing to stick to the strict COVID-0 strategy. Okay, top leaders have signaled a softening on this year's official growth target of around 5.5%, denting optimism about a rebound. Companies have a stronger willingness for IPO because they see the first half as a better time window to get listed than the time ahead, said Sheng Meng, a director at investment bank Chanson & Co. They have a weaker outlook for the market and worry that factors including earnings uncertainty could make listings in the future harder than now. Secondary market, companies rushing to list. China's with companies rushing to list, China's share in global IPO proceeds has more than tripled to 44% this year from 30% at the end of 2021, according to data compiled by Bloomberg. Better performance of newly traded stocks have also been a draw for listing hopefuls. Shares of mainland IPOs are up an average 43% this year, wow, over their listing price versus 13% drop seen in Hong Kong. Meanwhile, China's benchmark CSI 300 index has fallen about 16% since December 31st. One of the worst performers among major global equity gauges, as investors have had to grapple with stringent COVID curbs, a deepening real estate crisis, and continued crackdown on internet giants. To be sure, new share sales owe part of their strong performance to the fact that valuation during the IPO is capped by local rules. That typically ends up leaving some gains on the table for newcomers. Flops happen, but they are rare. Oh, that's interesting. Some of the deals that boosted the tally in China had political undertones. Telecom provider China Mobile and energy producer Chinook, biggest debuts of 2022, both listed at home after being kicked out of the US following their inclusion on the Donald Trump era blacklist. Yeah, that's what I thought. In China, they raised 8.6 billion and 5 billion respectively and are trading well above their listing price. China is a separate market from the rest of the world. Something that is unique among Chinese investors are those patriotic trades, said Qi Yan, the head of research at DZT Research in Singapore. Buying stocks that help China to be more independent from the rest of the world and to resist transaction from the US is normal. Tech love. Overall, though, tech sector has been one of the busiest for new share sales in China. Demand for computer component manufacturer Hygon Information Technology companies, 10.8 billion yuan, $1.6 billion. IPO exceeded the amount on offer by 2,000 times. Order taking began on August 3rd. The Chinese economy is literally 180-degree opposite to what we know in the Western market. Order taking began August 3rd, just as US House Speaker Nancy Pelosi visited Taiwan, rattled global markets. A semiconductors maker, a manufacturer of digital storage products, and a chip producer surged after debuting in the mainland on Friday. Together, IPOs raised 1.1 billion. Not a lot. A lot of the stocks now coming back to market in China are from the tech sector that investors seem eager to buy given the focus on building up homegrown capabilities, said Brian Freitas, an analyst for independent research platform Smart Karma at Auckland. And there you have it, folks. That's an interesting article. I think something that we may not have been aware of so much. So despite the doldrums in the Chinese market, IPOs have been strong. I hope you enjoyed that. Take a look at some of our links below. Be sure to join some of our niche-based investment groups. They are LinkedIn groups. The link is down below. We've got some cool stuff there. So take a look at those links and come join some of the groups, and then you can see what all we do on the financial and investment engineering side of things. This is Greg Silverman, out for now.